Happy New Year. This is Market Analysis with Stan Ehrlich. This is Tuesday, January 3rd. First trading day of 2023 for the regular U.S. exchanges. So I start out with the S&P 500 like I always do. And we have a little blank space to reflect the market being closed on Monday, yesterday. So far today, we have an outside down day. That's a bearish engulfing. Now, it is not overbought. If it had been, we would be getting a red ER sell signal, as we did, for example, back on April 5th, the beginning of a really big downswing in this bear market. So an outside down day at the moment, and it is 10:25 California time, possibly bearish, but not for the ER signal reasons. We are holding at support. 377.5 has been approximately the low a few times in the last almost 3 weeks. So far it's holding. If it gets lower than 377.5 on a closing basis, we could easily have a new low close for this move down, since the minor double top on December 13th and the first high being December 1st, which, by the way, I caught as a turning point because of other technical reasons, not an ER sell signal. And I said so on that day. All right. So if this fails to hold the support, we're going to go down and test the 370 area, 371 area. And if that, because it's not very far away, 8 points or so, if that doesn't hold, then there's a good chance this market could drop down for the month of January on the average quite a bit and be in the 350s pretty quickly. Now that's 20 points lower than where we are right now. So I see this effort to hold the support at 377 area, 378 even, as very significant. If we close below that, especially below the low made on December 28th, Katie barred the door, we're probably going to start another leg down. So far, my statements have been for the last couple of weeks that I was expecting a rally, and the close of the last couple of hours on Friday was encouraging because it came back to make the highs of the day and close only very slightly lower. But this morning's upside follow-through, which it did, and it made new highs for like 6 or 7 days, didn't hold, and that's not good. And now we're pressing the lows, the support area, for the last 2 weeks, 2 to 3 weeks. It's got to hold, and we have to start making higher highs than 386.5 real quickly, or this is going to fall apart. It's going to get bearish. I hate to say that. I was expecting a little bit more of a rally, for one reason, because of the Santa Claus rally, which is not doing very well at the moment. I'll show you that real quick here. We have a little 1 or 2 minute rally. So these two red lines are now going to be actually, one of them very slightly green and the other one's very slightly red, slight profit, slight loss. But the first trade that we put on a buy, which was on the 21st of December, is an outright loss, and I would say a medium-sized loss. So for the Santa Claus rally's sake, we need to see this market rally back up. I would have to say at least to 385 and hopefully into the 390s today, tomorrow, and the last trade gets offset on Thursday. Today you get out of a third, tomorrow you get out of a third, and the last third is offset on the third trading day of the new year. We're not out of the trade, the first one, yet. There's a little bit of time for it. We don't get out on the close. We get out at a very specific time of day, and we get into at a very specific time of day. All right, enough of the Santa Claus rally. Going back to our indexes. And the spider, again, is not doing too well. The DIA went down to exactly, to the tick, the low of Friday, held, and that is not all that close to the lows of the last 2 to 3 weeks, like we are very close in the S&Ps. And in a moment, I'll talk about the Qs, also very close to the Qs. But the DIA has held up better. In the last few months, it's gone up more, made higher highs for greater time periods, broken its major bear trend line, and just generally speaking, done a much better job from a bullish standpoint, and is still holding above that long-term bear trend line that started at the early part of the year with, of course, our ER sell signal smack dab on top. You have to realize these are automatic. I don't do these on purpose. I wrote the code on purpose. I came up with the idea because of my 52 years of experience, but that's generated by the software. I don't do that on purpose. And the green bars, when we get buy signals like May 24th, are also automatic. The ER signal. 2 back-to-back sell signals that didn't work that well, just a little bit for a day or so, on November 1st and November 2nd. So we're not overbought or oversold at the moment. We're in the middle of the range of the RSI, basically 40s and 50s for today. I just don't like the possibility of an outside down day. The DIA does not have that yet and needs to make a new low. We are equal today. That's low is the same as Friday. Now, the Qs did get a little bit below Friday's low. So therefore, it's an outside trading range or a bearish engulfing at the moment. If there's a rally by the close and these closing prices are higher than Friday's closes, we will have a bullish engulfing. It's a total flip-flop. And it could be, should be, usually is bullish. But an outside down day is not bullish. It is bearish, typically speaking, the usual interpretation. I have to agree. The Russell 2000, I don't mention very often, is having an outside down day as well. And like the spider, it jumped into new highs for a few days. In fact, for about 2.5 weeks or so, and didn't hold it. And came right back into the same trading range. Now, we don't have any downside breakouts yet. The market is trying to hold. We just had a little bit of a rally in the spider. I have to say about a point's worth. So now we're down 290 instead of almost 4. So we'll see what happens by the end of the day, 10:30 California time at the moment. Let's go to futures. Okay, I'm going to start with a bond, 30-year long bond. And I'm going to go through these relatively quickly. We got yellow at the end of last week, oversold, so you should expect a bounce. It is bouncing, but the trend is still relatively neutral to bearish. So a little bit more strength maybe, and then a test of 123 or lower. Next, 10-year notes. A couple of old trades showing these are ER automated trades with the yellow trailing stop on a long-term basis. Finally formed a head and shoulder bottom. That worked very nicely, almost to its specific minimum upside objective. And then it turned down. Like bonds, it got oversold and it's bouncing a little bit, but also like bond futures, I am neutral to a little bit bearish. Next chart, gold. New highs, nothing going on here, not quite overbought, looking for more strength. Intermediate term trend is up, and we did break long-term bear trend lines, so I have to say that the trend is now probably up point blank. There's some overhead resistance to overcome before we start, getting excited about 2,100 and more. Next, same comment about silver. Pretty much exactly the same comment. Next, cocoa. We had a great sell signal last week. I pointed that out. This is a new low since then and a potentially new low close. So cocoa's doing great. Caught the top of this rally with the ER technique. ER stands for Ehrlich reversal. We got oversold a few weeks ago, and it's rallying modestly since then. But we are in an area of resistance, and I'm not going to be surprised if today is the highest high. We have an outside down day. It's a bearish engulfing, typically bearish, starting something on the way down. Didn't get overbought, therefore it didn't turn red. Otherwise it would have, the bar. Next chart. So I'm turning bearish on crude oil. Next chart. Live cattle got overbought, and like it's supposed to, usually when they're overbought for a day or two or three or four, or even more, the market turns down. Here we have an overbought condition for 5 days, and it finally turned down. So it's tricky to catch the right point when the turn actually happens, but there are telltale signs and techniques that you can use. We had a great sell signal way back here in April, and an excellent buy signal September 29th. Next. Ooh, pretty oversold now in natural gas. Probably a low day today. We are low and last at 3.977. Yep. I think we're very close to a buy. I'm not getting a buy signal yet. The yellow means we're oversold, and it's a warning. You don't want to be going short down here. Wait for a rally if you want to go short. The trend is down. I'm not turning bullish. I'm just expecting a little rally in the bear trend. Maybe a little bit above 5. I'm going to say 5 to the high 5s. High 5. Next. High grade, copper. Neutral. Not much to say. Bearish engulfing could start to go down. Next. Platinum. Overbought. Interesting. Another one that looks like it's going to come down a little, but not too much. Good support below the market, and the trend is up. So probably you're looking to be a buyer at 1,050 maybe, or a little bit above that. Next, wheat. The creme de la creme sell signal here back on March 8th at the top of a series of limit up bid, maybe even all day a couple of times. Limit up on the opening, never came down a tick. Closed limit up bid for on March 4th and March 7th over the weekend, and then had a bearish engulfing and an overbought, way overbought condition, and we caught the top of the wheat market. That was, I'm sure, because of the war. Another great sell signal on May 24th. Well, lately we got a little oversold, and it's crept its way back up slowly into resistance. I think it's probably going to turn down, but I have no signals. That's just an educated guesstimation. Next, live hogs. Hey, maybe a head and shoulder bottom if we start to turn back up again. But we're not very close to being oversold. Too bad. Maybe that's not going to work. Neutral, waiting for something to happen. The E-mini, of course, the S&P 500 is an index and a futures contract. That's why it's in the group here, futures contracts. And October 13th, we talked about the October lows 1 to 2 months in advance. It's a historical phenomena, a cycle, a seasonal. They all apply. In October, the stock market loves to bottom out. There are many different reasons, excuses, elections, blah, blah, blah. I don't buy any of them. It's just that it happens in October too often for differing reasons. I've lived through, I don't know, 20, 30 of these, realizing there was the tendency of October to be a turning month, and watching it develop or not develop, or be a little late, a little early maybe, but most of the time, bingo, October. And this time, wow, I got a huge bullish engulfing, oversold conditions, and a buy signal smack dab on the bottom. We got to love that one. On a 10 out of 10, that's a number 10. Okay, broadening formation lately, looking a little toppy. I'm expecting the E-mini not to do too well here, and that does not speak well for the spider either. I'm not oversold, so I can't claim that it's about ready to turn back up. We're down almost 3 points on the spider again. Okay, next chart. Sugar. Got overbought, turned down, trend is up. I'm expecting it to turn around soon. It might try to get down to the 19 cents flat, maybe a little bit lower, 19 bucks flat. So I'm a little bit bearish still on sugar. Next, coffee. We caught the bottom, didn't go up that much. Long-term trend is down. I'm looking for it to turn down and make new lows soon, in a week or 2 or 3. Next, OJ got overbought, turned down, is in an area of support in a trading range, neutral momentarily, but the trend is up. So if I get a buy signal, I'd be much more interested in being a buyer. A profound sell signal would interest me also, because it doesn't have that much support nearby, and it would need to go all the way down to 169-ish in order to hit any substantial long-term support. Next chart, corn. On Friday, we have an outside down day, bearish engulfing. That was on the December 30th. Great signal. We got short, ER1 got short on the day of the red signal always. And if it's green, we always have an ER fill for bullish or bearish, one way or the other. ER3 also got short, very close to the high of this morning, and it's down significantly. Great signal so far and great results so far. The last signal was a bullish one, and it was smack at the bottom of the break. Corn's being real nice to me lately. That's good. Next chart. Bean oil. Got the bottom on soybean oil. And nothing at the moment, so probably a little on the neutral side. But the last signal was a great ER buy signal. Next. Soybeans themselves. Got overbought on Friday, but that's about it. And right in an area of resistance. So no surprise, it's turned down significantly today. Have to be neutral and basically looking for a buy signal because the trend is up. Not strongly up, but up. Next, heating oil. Looks like it's building a long-term top. This could be a very broad double top formation. We got a sell signal smack dab on top. You got to love it. June 17th. We had a sell signal almost on the high day, November 8th. Also a great signal. So a double top with sell signals, ER sell signals, and a sizable one at that. A major downside breakout would occur if it started closing below 238-ish. That's a ways to go, though. We'll see how this pans out. Neutral for the moment with a little bit of a bearish expectation. Soon to be much more bearish if we have a downside breakout. Next, soybean meal. Little overbought a couple of weeks ago. Trend is up. Not much to say here at the moment. Next, bonds. This is where we started. I'm going to show you forex because it's important. Today, the euro dollar, I should say Monday on the 2nd, because it did trade during the day yesterday, had a higher high for the trend, but it failed miserably in an overbought situation. Not good. Usually an indication the market's going to turn down, which all of a sudden the next day today, we are now making new lows for 3 weeks. Boom, just like that. In 2-day time frame, back to back, new highs for months, and then all of a sudden new lows for 3 weeks the next day. That's bearish in my mind. No ER signal, although we had a couple signals that didn't work very well in the last 3 weeks. Sometimes these signals cluster and are not necessarily exactly profitable the way that the automated trading system uses them. Nevertheless, they just simply cluster occasionally. Here's 2 buy signals. Didn't go up too much, but we caught the low on one of them. We did catch the bottom of the market on September 28th to the day, which is fantastic. The dollar index should be the inverse of this, and it's almost new high. Well, it is new highs, barely, not that much, with 3 buy signals in the last 2 or 3 weeks, including the first one, which was the low day so far. So that's good. And we caught the top of the market as well on September 28th. Let's go to the dollar US, the dollar yen. We caught the top of the market. It's oversold at the moment. I expect it to come back up a little bit, but trend lower. Next, we caught the bottom of the market on the Aussie to the US dollar on October 13th, I'll bet you. Yep, October 13th. And neutral for the moment, but the trend is up. Next, we have US dollar to the Canadian, and I'll say neutral. We did catch the top with a bearish engulfing ER sell signal. Next. This is a little more difficult. Some good signals and results in the last several months, but lately we had a buy signal that did not work very well. Small profit opportunity for a day or two, but this has just jumped dramatically to new highs here. It's not a bullish engulfing. It's not oversold. It came close to being oversold, but I'm neutral to friendly here. It looks like this thing is starting to do something on the upside. It's got a lot of overhead resistance, so I'm not expecting it to go straight up. And lastly, we're going to go with the euro to the British pound. Overbought 5 days in a row, just before today, and now a new low for those overbought days, the last 5 days, new lows for 5 days, 6 days, 7 days actually. So I think we're heading down for a bit. I don't expect it to get too badly bearish, maybe go all the way down to 86.86. That wouldn't be out of the range of expectation at all. And let's check the Santa Claus rally real quick. Well, it moved up a little bit since we looked at it last, but not much. Needs to rally a bunch more if the Santa Claus rally is going to work this year. Right now, it's a little bit of a loss. Not too bad. Easily corrected. Doesn't need a real big rally. Anything up in the middle 80s, 6 points, will do the trick. But it has to do it the next day, and today, tomorrow, and the next day on the average. That's it. Stan Ehrlich, market analysis for the first day of 2013. You have a profitable trading year. See you tomorrow.